Hi and welcome to TCM Education. This is really a video that I don't think was on anybody's agenda, at least not here at TCM, to do. And the topic is the reverse split issue. Now, what happened over the last couple of weeks that suddenly we're seeing stocks that are coming basically out of nowhere, some of them with a nice story behind them, and they're moving from $3 to $120 in a matter of minutes, metaphorically speaking. And then everything crashes. All the story seems like the story behind them, or what I mean is the fundamental story is I don't know, gone. Did it even exist from the beginning? Not sure. We as day traders are very much attuned to what's going on under our eyes every second, because we have the tools, we have the screeners, we have the attention span, and we are locked basically on the best stocks, best movers, accompanied by volume, by trading range. And this phenomenon, which is a reverse split, can hurt many day traders. Obviously, it can hurt anybody. Long-term investors, I don't know if they are in the business or they cannot even observe this type of stocks, because you need the screener in front of you to observe those meteoric moves. And those who fall for those are short-term traders most of the time, if not all of the time. So what happens here? A stock doesn't have any business, it's in danger of being delisted, and a way to revive the stock price, which is under $1 and under the threshold of being delisted from the NASDAQ, although there are some rules for the New York Stock Exchange, I'm not familiar with them and we're not going to discuss them. They are prone to doing something that's very much on the table for every company. Do a reverse split. What does it mean? If the stock price is, let's say, 50 cents, and you do a 3-for-1 reverse split, so 3 shares become 1 share, and half a dollar times 3 is $1.50, and suddenly the price is over the threshold of $1. The liquidity drops by 30% or whatever, and everything is fine and dandy. But that's what happens basically. It's not like the company businesses are making more money. It's not like anything fundamental happened. The only thing that happened is that instead of owning 3 shares, a share owner owns now 1 share. So 1 share is worth $1.50. 3 shares of 50 cents are the same, $1.50, nothing changed, everybody is happy. Well, but it's not like everybody's happy. The liquidity drops. Now let's take this as example, which is one for the books clearly. CYN is a technology corporation, and without even talking about their business, I'm looking at the chart, and so it happened that on a date of February 18, when the stock was pretty much 5 cents or 6 cents, meaning near zero. So there is no business in this company at all. Okay, so they do 1-for-50 reverse split, and the stock jumps overnight. Obviously, the liquidity drops by a factor of 150 to 1. The stock jumps to $10. And then it comes back down to $3 and then sits, and nothing happens for months. Okay, so it's not like this 1-for-50 is bringing in new business. It's actually not bringing any business. If at all, it's raising a very big red flag, because it reduces liquidity by a huge factor. But it doesn't mean that people are not working, and the projects are being developed. So everything is, nothing changes. But what happens lately is that for some reason, not immediately after the split, but sometimes days or weeks after. In this case, it's months after. A piece of news comes out. Yesterday it was cooperation with NVIDIA, but again, if you read the piece of news, I don't know, it smells kind of I don't know, it smells bad, but can you argue with the intraday chart? And if you look at the intraday chart of the stock yesterday, that's the intraday chart. Let me point it to you again. So the stock closed at $4 Wednesday and traded as high as 41 yesterday. So that's a factor of 10. That's a 10x move in how many hours? By 11:30. So it's 2 hours of trading. Let's take into account some halts in the price action by the Nasdaq or whoever is in charge of this stock. Maybe it's a New York Stock Exchange, I don't know. But overall, so the stock is 10x in 10 minutes, in 2 hours. And again, the volume is outstanding. Now keep in mind that this stock lost all time 150 of its original liquidity from a couple of months ago. So it's highly illiquid. Okay, that's why in retrospect it moves so fast, because there are pits of price areas where there's no liquidity. So if you enter it with a limit order, of course you're not going to get filled. If you're buying it like insane with a market order, you're getting filled. I'm guessing that's what happened here. The FOMO in this stock was, I guess, fueled by retail traders, day traders, many people that maybe even others, maybe smart money even. I doubt it, but it's possible. So that's the story, and then the stock comes down and closes basically almost at the lows of the day. So that turns a beautiful story into not a tragedy because it's only money here, but it's very disappointing to watch. Okay, now if we look at the shareholders here, we can understand why. There are almost no institutional shareholder in this company. Obviously, NVIDIA did not buy any shares, or maybe they will, but right now they didn't. So that's CYN. Again, very disappointing. The same scenario happened in NKTR. Let's go to the daily chart. Now remember, not all stocks are created equal. NKTR. Now what happened in NKTR? That stock went from for a 1 to 15 reverse stock split when the price was around 50 cents. It jumped accordingly, and I don't know why and the timing, but they announced a new drug, and that drug received some FDA approvals. Hopefully it's a real story and everything is fine and dandy. And look at the price action, and we covered it extensively, but you can see here that the stock is building on the momentum. There were actually second day traders, even third day traders on this stock. Now if we go to the shareholders here in NKTR, there is some smart money here. Okay, BlackRock, Vanguard, and some many others. State Street is here maybe from 10-20 years ago when the company was really something more promising. However, okay, what raises here the red flag is the reverse split, and immediately after the news. That creates a huge opportunity for those who are in, okay, to sell at ridiculous profits and leave those who are entering late hanging. Okay, that's not maybe that's not the case for NKTR, but it's clearly the case with SBT, which is another stock that we covered here on our channel, and this is super super awful to watch. So SBET, again, you can see the same phenomenon. The stock has now business, trades at 60 cents, then does a 1-4-12 reverse split, jumps to $3 or $4. Then the news are coming in. What are the news here? If I remember it quite right, the stock is merging with investors to create a kind of Ethereum bank, the same, or buy Ethereum, or they got an infusion of $450 million worth of Ethereum, and the stock goes from I don't know, $2-3, let's say $4 to $124 in 3 days. 1, 2, 3, sorry, in 4 days. And the story, it repeats itself. This unsustainable meteorical move crashes, and I don't know who bought at 124 or at 120 or whatever is left hanging, obviously, because the risk management is impossible, really impossible. You have to take, I don't want to say all or nothing, but you should be able to take a risk of 50%. That's reasonable. Anything less is not reasonable. So again, we go to shareholders and we look at the shareholders of SBET, and clearly you don't see any important shareholders. It's you know, shameful, but there is no smart money here. If there is, they're holding 0 positions, and again, too bad. And that's the third example. So out of 3 examples, and maybe there are many more, I just I didn't plan of doing such a video, but it really stands out. And then we have another stock yesterday, KWE, that's K-West. And this stock, again, you can see 1-4-21 stock split in April. And then the news are coming a couple of days later, or couple of weeks later. Now, is this another story, or maybe this is they're really selling their products to the public? I don't know. I'm just making a point that those unsustainable moves that we're fighting for them every day are carrying a lot of risk, and when a stock is up so much, something very and behind it is not necessarily a business plan or real news, and most of the price action is driven by the sudden drop in liquidity. So the reduced liquidity is responsible for the higher volatility, and when there is demand, this demand explodes. When there is excess selling power, there are no bids. Okay, so the bids disappear on one hand, and then the stock can drop 10%, 20% in a matter of minutes. And if you're not prepared to take those huge risks, and most of us aren't, we're not prepared because we haven't seen many plays like this. We see them very often lately, but it's not like a common thing. We like to trade a stock that's doing its job, risking 1 to 2% to get 5, maybe 10%, but we can measure the risk. On those moves, you cannot measure the risk. The liquidity dries out, and when a stock moves from 3 to 120, or whatever happened over the last couple of days with CYN and SBET, many people are left hanging, so that's a red flag. Hopefully it will help you reach better decisions. And when people ask me how to act, you have to act responsibly. That's the bottom line. Okay, guys, thanks for being here with our video and with us in this video. Take it into account, and we'll see you. And we'll see you hopefully in our weekend seminar, and if not in our weekend seminar, in our next video.